All right, everybody. Good morning. How is it going? Got an interesting top 10 for you, so I hope you got a big old cup of coffee so we can dive into things and talk. As always, thanks to all those who have subscribed. I really do appreciate the support, and links to all 10 articles discussed will be down in the description, so let's jump into things. First up, we got to talk about Stellar and its looming local top due to its social media volume. So, over the past few days, Stellar's been caught up within the throes of what this article is calling an incredibly intense uptrend, adding over about $600 million to its market cap. Nice. And a large portion of these gains have come over the span of about 24 hours. The price of this token has rallied despite the overall crypto market showing some signs of weakness. I personally would call it signs of consolidation, as well as issues with the fact that the U.S. stock market is currently wobbling on its last leg for the 150th time in the past 90 days. But yeah, no, XLM is starting to show some signs of forming a midterm top to its price. They're arguing that it's because the social media volume has begun to hit its peak. You know, as at the time of writing, Stellar is trading just under 15% its current price of, looks like about 9 cents. The cryptocurrency has been caught within a firm uptrend throughout the past few days, with its latest leg higher kicking off earlier the past Monday. It's had a pretty good upsurge. Beginning around Monday, it looks like it was about 6.5 cents, hit about 8.5, and now we're sitting at almost 10. Not too bad. So the uptrend has been driven by strong volume and a blossoming sentiment among its investor base. From a fundamental perspective, one factor that suggests the rally has been premised more on hype than on fundamental strength is the fact that on-chain development activity has actually been plummeting on the network. Data from analytics firm Santiment reveals this, showing that although development activity usually rises in tandem with Stellar's price, this latest rally seems to be a bit of an anomaly. So XLM is showing a telltale sign of a local top. Social media volume has exploded to an 8th-month high. Typically, when crowds hype up an asset to a major deviation from average on a rising short to mid-term profit-taking opportunities present themselves. So basically what they're saying is people are probably going to start cashing out. They've made their money mid-term, short-term on this pump. They're going to pull out because they don't actually believe in the long-term success of the crypto. Not too bad of a thought process there. I normally don't care for these analytic things, but this kind of shows some sentiments and how hype really can have a huge effect, but long-term growth is backed up again by my favorite, development, real-world applications. So, yeah. All right. Well, that takes us through talking about Stellar. Now, I could not get away from this. We got to talk about the fact that Coinbase is being rumored as pursuing a listing on the United States stock market. Huge. This thing literally got published like 10 minutes after I posted my last video. I was so upset. But let's get in and talk about it. As we all know, Coinbase has long been considered the flagship company of the crypto and blockchain industry. I'm not the hugest fan of Coinbase, but I use them because they're easy, and I've been using them for a long time. But in its long history, it has raised money from some of Silicon Valley's venture capitalists at more than an $8 billion evaluation. Dear Lord. So, in an exclusive Reuters report published on July the 9th, confirmed that yes, Coinbase is looking to trade its shares on public markets. So, per the outlet, 3 people familiar with the matter, I love those quotes, have confirmed that Coinbase is looking to undergo a stock market listing as early as this year, possibly Q4. We'll see about that. I think that's a little aggressive, and we'll get into why here in a second. So the anonymous sources said Coinbase has not yet registered the plan with the U.S. SEC, which is necessary for it to trade on U.S. markets. Hence why I think 2020 might be a little bit aggressive. But they have been in talks with investment banks and law firms to establish a plan of how to do this rollout. They didn't say who they were, but JP Morgan recently took on Gemini and Coinbase. Hey, JP Morgan, I still can't buy crypto with my credit cards. Fix that. But yeah, JP Morgan does deal with IPOs and direct listings, so it's possible they're working with Coinbase. JP Morgan Chase is notoriously anti-crypto, though they've recently had some changes, so maybe due to things like this starting to pop up, because hey, if they can make money, they're gonna make some money. But Coinbase's purported plan is notably not the same as an IPO or an initial public offering. A direct listing would be when a company lists itself on an exchange without selling new shares. An IPO is when shares are created, underwritten, and then sold to the public. So basically they'd be saying you're going to be able to publicly trade our shares, so those who privately own shares of Coinbase stock can dump on the market and get a lot of money for their investment. So it's a good way to reward your investors and then create a new crop of investors for down the line. So not a bad plan for them if that's what they're pursuing. I just don't think end of this year is going to be doable. It's probably going to be early to mid 2021. But it is good news for the crypto industry. It brings attention to the space, and it'll engage many who want crypto exposure but don't want to own crypto yet. There's plenty of people like that. Crypto is still a emerging asset class. It's still very, very high risk. Some people are still not comfortable with owning it directly, but if they could buy into a company that owns it, they understand that a little bit more. So, and if they're doing this now, it's because their in-house data is telling them it's a good time. So retail crypto buying is picking up. We've talked a lot over the past few weeks since I started this channel about how all these different coins and networks are dropping their upgrades and new developments, and they're working with businesses. So I really do think Coinbase doing this is them being like, okay, it's time for us to enter the stage as a legitimate business that we can build into a multi-billion-dollar thing to rival some of the bigger tech giants like Apple, Google, and Amazon. I'll probably buy Coinbase stock when it opens up. It's one of those things, I don't particularly care for it, but I gotta admit, they seem to be failing upwards. So whatever. All right, let's hop on over and talk about number 3. This one's not truly a crypto thing, but I wanted to touch on it because, well, the title got my attention, and it kind of shows a little bit of the background of what the cryptocurrency space is all about. So this is a Jay-Z-backed startup. I believe Will Smith is also invested in this. Lord knows why. Well, if you're a multi-millionaire and billionaire, why not? So this program is called Alchemy. You've probably never even heard of it. If you do, hats off to you, and why are you watching my channel? You know way more than I do. So Alchemy released the Alchemy Build Suite, which includes debugging and search tools. Major blockchain products already built on top of this platform, and the startup received $15 million in a 2019 Series A funding. So you've probably never heard of it, but you actually have it to thank for CryptoKitties. That's right. Alchemy was helping us build that. What fun. The most famous Ethereum dApp, at least for the moment. I think Compound's probably got it right now. So the company that counts cultural lines like Jay-Z and Will Smith among its investors is going to make blockchain development even easier. So, for those of you like, what the hell is Alchemy? Here we go. It's a suite of tools that's built on... Alchemy Build is a new suite of tools built on top of Alchemy's existing platform. It's designed to reduce the amount of time blockchain developers spend on issues not related to the product itself. This is not a coin. This is not a token, anything like that. It is a tool set. It is background software that includes an explorer to easily find bugs and errors, a visualizer to find transactions that aren't going through, and a composer to help with prototyping, and a debugger. So it's support. It helps different chains develop. Currently Augur, Kyber Network, Gods Unchained, Binance Wallet, and Opera Web have previously relied or currently rely on Alchemy's platform to do the heavy lifting so they can focus on their core offerings. So this is support. This is assistance. This is helping them streamline their debugging processes so they can deliver us a better end product, which hats off to them. So Alchemy co-founder and CEO Mikhail Viswanathan thinks build will supercharge what's possible with the platform, and ultimately this means developers can build products faster, which means users get more products and more innovation in the blockchain space can happen overall. Oh, and the products will be better and less buggy. That too. So yeah, pretty interesting idea. I did not know a lot about Alchemy. I found them on the website alchemyapi.io. Effortlessly build blockchain applications, get access to enterprise-grade scalability, security, and developer tools powering the leading blockchain products in 197 different countries. Oh man, as seen on all these fun things, Wired, Bloomberg, TechCrunch, Yahoo. And they're able to pop up Augur, 0x, CryptoKitties, OpenSea, Kyber Network, Gods Unchained, Opera, Binance, and Funfair. I haven't heard of that one in a while. I did own some Funfair at one point. I'll give them that. So, this is a very, very interesting support system, and it's a nice little peek behind the curtain at what many of us don't see. You know, I'm a crypto investor. I enjoy reading these news articles and talking to you guys about them. But the nuts and bolts of it, I'm not a computer engineer. My undergrad's in education. Like, I'm not a tech savvy person. I can work cryptocurrencies. I can do scripts. Yeah, I'm a script kiddie. I can copy and paste stuff. But the true nuts and bolts stuff like Alchemy is really cool, and I'm very, very excited, and I hope this leads to a better user experience for me based on the tools they're developing now. So, that's enough talking about Jay-Z and Will Smith and crypto. Let's hop over and talk about everyone's least favorite stablecoin, Libra. All right, so economic historian, I want that job, Barry Eichengreen believes that stablecoins are either too fragile, too expensive to emerge as a dominant monetary form, and he is saying Libra will never see the light of day. If you are listening on my podcast, it's kind of fun. Got a little picture of a hand reaching out of a grave. I gotta love Cointelegraph. So, UC Berkeley professor Barry Eichengreen, that's why, argues Facebook's planned Libra stablecoin faces too many insoluble problems and too much resistance from governments to ever launch. So he asserts that the stablecoin sector is largely ignorant of monetary economics and history, and his economic work has led to invitations to a series of lunches at excellent San Francisco restaurants with the founders and funders of prospective stablecoins. All right, his conclusion at his luncheon, companions knew all about blockchain, but they didn't know much about monetary economics, emphasizing they'd been unaware of past speculative attacks on pegged exchange rates. He goes on to say, their stablecoins are fragile. They're either prone to attack and collapse, or they're only partially backed or collateralized with actual dollars or dollar bank balances, so they are prohibitively expensive to scale up if they are in fact fully or over collateralized, which they probably should be. So he's saying that a lot of stablecoin advocates are actually kind of naive. And he points to Facebook's private label stablecoin, and it remains plagued by all these different challenges. He said there are concerns that Libra will undermine the effectiveness of national monetary policies in both emerging and developed states, noting that citizens in countries with volatile fiat currencies will opt to abandon their local money in favor of a globally accepted Libra dollar. Yeah, especially in some of these rougher countries, they may do that. And the idea of a central bank that would then need to spring up, with Libra's planned over-collateralization of this token, the excess backing will be provided by transaction fees, but as high fees deter adoption, fees are going to be kept low, raising questions on the adequacy of capital buffer. Oh, Jesus. But he also says Libra will need a central bank, in effect, if the market that grow up around it are going to be stable, and national governments probably don't want to give a global corporation a bank. That's some real, dystopian level stuff that, I wouldn't be surprised if it actually ends up happening, but we'll all end up flying the Facebook flag off of our front porches. So, yeah, I kind of agree with him. I think there are too many issues with Libra. Facebook is too big. The issues it will raise are large, but at the same time, Libra is just the first time we're going to be talking about this issue. Tether is insanely huge, and we're actually going to jump in and talk about some other downsides with some centralized stable coins. That this is the first time we're looking at this, but it's not going to be the last. But before we get into that, let's hop over and talk about it. So, blacklisting stablecoins. So the stablecoin news continues. Centralized stablecoin issuers are blacklisting addresses, and here's what it can mean for crypto. So, back in mid-March, when the decentralized stablecoin DAI was on its last legs, its community elected to have a chunk of its pegged to the US dollar collateralized by the centralized US dollar pegged stablecoin USDC. So decentralized coin, it needs to get some more collateralization. They peg themselves to another stablecoin. Okay, in theory, I can see why it was done at the time to keep it from collapsing and have people lose all their money. But now Center, the company that's behind USDC, which is a centralized stablecoin, I do use USDC, so this actually kind of makes me uncomfortable with some of my funds. But they blacklisted an Ethereum address holding $100,000 worth of the token. So suddenly, MakerDAO's DAI doesn't seem quite as centralized as it was before. So imagine if some of the USDC is sitting in a Maker vault. Stani Kulichov, CEO of DeFi lending protocol Aave, told Decrypt, putting cryptocurrencies in Maker vaults generates DAI. What can happen is that Center could use the blacklisting function, and the funds would be locked in there in a vault, undermining DAI's peg to the dollar. And while DAI might very well survive the shock, our friends at Defiant pointed out earlier today that stablecoins are even blacklistable to start with potentially undermines the DeFi protocols that integrate them. It's a good point. You can blacklist these things. If a large enough wallet gets blacklisted, if a government turns on a stablecoin and locks the whole thing down, what in the world happens to those funds? It's kind of silent for me right now because I don't know the answer to that. Because the answer is probably the uncomfortable thing of your money's gone. Your money's gone. So, crypto companies, though operating in a largely unregulated environment, must still comply with law enforcement, and Center appears no different. So the USDC blacklisting has gone from a hypothetical problem to a real risk. So Center, here's what they had to say. They confirmed it did happen, and they stated, while we cannot comment on the specifics of law enforcement requests, Center complies with binding court orders that have appropriate jurisdiction over the organization. So what this probably means is that $100,000 was traced to some criminal activity of some kind, hence why the court order to lock it down was put in place. It makes me feel slightly better, but the cryptocurrency space has risen up around the idea of people having personal control, and no one can take that away from you. And to have it suddenly taken away, it makes me uneasy, even if the reason that it was taken away and the funds were frozen appears legitimate. If you guys understand or you feel the same uneasiness, like there's this balance that we're trying to find, like how much decentralization is good and how much is kind of bad, and where the middle ground needs to be. So I'm very uneasy about this, because it just means that, down the line, if a government decides they don't like Center, they could issue a court order locking down all USDC while Center deals with their legal problems, and that would cause a complete collapse. But while this is a first for USDC, Tether, my least favorite stablecoin, it's the largest on the market. It's blacklisted 39 Ethereum addresses holding millions of dollars, according to a dashboard created by Philip Cascanoui, a blockchain software developer, and it's been doing so since November of 2017. Cool. So Center and Tether, two centralized companies, have the power to block transactions and work with law enforcement, is at odds with the principles of decentralization championed by the crypto faithful. Oh. So, nevertheless, the policy document from Center shows the company will blacklist addresses when failure to do so would threaten the USDC network or to comply with U.S. court orders. Center reserves the right to block the transfer of USDC, wrote the company in the document. Makes me bleh. So, this relates back to DeFi, obviously, because of how you can hold it. So Michael Anderson of the DeFi Venture Capital Fund Framework Ventures told Decrypt this is why he's not invested in DAI. Highlights that when you have a central entity, anything can be stopped and they can freeze those assets. Instead, he said he's invested in Synthetics, which we talked about yesterday. You can check that out if you'd like, which he claims to be more decentralized. Other decentralized stablecoin companies can also claim to be outside the clutches of their issuers. Interesting. Definitely something to keep an eye on. Definitely something that makes me uneasy and probably makes you pretty uneasy as well. But all right, at this point, we've gotten through 5 of the 10. So everyone, stand up if you can. Stretch it out. Touch your toes. If you can't touch your toes, start working on that. You need to improve your flexibility. All right. Okay, so let's jump over and talk about VeChain, because I can't go a week without mentioning them at least. So, Shanghai Municipal Commission of Economy and Information recognized VeChain as one of the most innovative companies in the blockchain sector. Good for them. VeChain's been on a tear recently. I've not looked at it to date, but I do know that they are way up from where they were even just a week ago. A report from the commission mentions 3 important applications and projects of VeChain in Shanghai. So, the above company, I'm not reading that again, they published this new report, and it highlights 3 of VeChain's products. Its partnership with Shanghai Gas, Walmart, and H&M's. So, let's talk about that. So, last year, Walmart Shanghai and VeChain, both companies launched the Walmart China Blockchain Tracking Platform, WCBTP, based on the VeChain blockchain. The supermarket has been able to expand the variety of products it offers its customers. In addition, Walmart can share information about its products with suppliers and customers. They can track a given product from the beginning of the supply chain until it reaches their nearest Walmart store. And once their customers can use WCBTP to receive all information regarding a product. We've actually talked about this prior. It helps make sure that what you are buying is legitimately it. Food counterfeiting is a real thing. They will take a fish and dye it red to look like salmon. They will, and charge you as much as salmon costs instead of what that fish would normally cost, and most of us are too, our palates aren't sophisticated enough to detect the changes, so we end up overpaying for something. So they also talk about the Shanghai Gas project. They partnered with Shanghai in April of the year. It enabled VeChain to establish energy as a service ecosystem. So this ecosystem, together with new blockchain infrastructure, improved trade, financial service innovation, and industry data shared in the province. VeChain partner PricewaterhouseCoopers offered its consulting services and product development research. This way, cooperation, was able to overcome obstacles faced by the industry, especially in the management of logistics operations. There we go. And then finally, VeChain partnered with D&V GL to verify and track products, materials, and processing plants for the H&M Group. This partnership actually began back in 2018 and has enabled the fashion giant to find sustainable and recyclable materials to produce its clothing. This is why I love VeChain. Real-world applications, long-term growth. Real-world applications, long-term growth. I don't know how many more times to say it. Long-term growth, real-world applications. All right, one more time. Let's hop over, talk about Kazakhstan. This one's a bit of a long read, so I'll summarize it for you best I can. But Kazakhstan is setting the eyes on a top 3 spot for global Bitcoin mining. So unlike other countries in Central Asia, which Kazakhstan is in Central Asia, if you know where Afghanistan is on a map, it is north of it. There's Turkmenistan, Uzbekistan, and Kyrgyzstan, all kind of in a line like between Afghanistan and Kazakhstan, so they don't share a border, but it is north of Afghanistan to the northwest of China, west of Mongolia, and south of central Russia. That's your geography for the day. All right, so the Kazakh government has adopted an overall friendly approach to crypto recently, although they've not issued a lot of regulatory clarity. However, positive developments were preceded by a lot of turbulence. Back in 2018, 2017, they were kind of like, we don't know about that. But in December of last year, local media reported that Kazakhstan's lawmakers wouldn't be taxing cryptocurrency mining until the mined assets are exchanged for fiat. Nice, you don't have to pay the initial thing. I wish that was true here in the States. Crypto mining would not be treated as an entrepreneurial activity, but rather a purely technological process. And then a recent bill, which was approved by the Kazakh Senate and signed into law in June, essentially legalizes mining. They say people involved in digital mining are obliged to inform the authorities about their activities, and also stresses that miners are the legal owners of the digital assets they produce. So nice. But why Kazakhstan? Well, Kazakhstan has really, really cheap electricity. It is very oil rich. In fact, for a kilowatt hour in Kazakh, the average price is 4.1 cents per kilowatt hour for households, and 4.9 cents for businesses, about 5 cents an hour for a business. By comparison, the average electricity price in the United States is about 14 cents. I'm below average. I think I pay like 12. So average is about 14 cents depending on the area of the country you live in and your own local municipalities. Texas seems to be offering comparative prices to Kazakhstan under certain conditions, but it's just really easy. If that's your base rate and you can negotiate an even lower rate because you're bringing X amount of business and X amount of money into the economy, it's definitely a very attractive place for you. So it's also located in a great location for mining. It's got a cool climate. It's close to China, and it's becoming a popular location for Chinese miner to move old gen machines from China to Kazakhstan to take advantage of cheaper electricity. So you're upgrading. Instead of turning off those old miners, you got free real estate over in Kazakhstan. It makes sense to move it over there, and it's cheaper than electricity, so even though they're older machines and may underperform, you still might get a little bit of profit, or at the very least you break even on it and then bank on Bitcoin growing over time to make you your money. So, however, there are no natural prerequisites for cheap electricity in the country. It's mainly produced by coal-fired power plants. Some other drawbacks of Kazakh-based mining, namely an overall unstable situation in the region and inadequate safety of local mining farms. Yeah, there's some downsides to it. It's risky, but all crypto is risky. And like I said, if you're moving older machines over there, they've already paid for themselves. So anything at this point is kind of just gravy. But last month, Kazakhstan's Minister of Digital Development, Innovation, and Aerospace announced the department is planning to attract 300 billion tenge, or $738 million worth of investments by 2023 for activities related to crypto mining. It's pretty ambitious, but the country has some statistics to back them up. According to that guy, there are currently 14 crypto mining farms that have already brought in approximately $201.7 million US dollars of investments combined. So they're viewing this as a growth industry due to the cheap electrical prices. So keep an eye on Kazakhstan. I don't expect any of you guys listening to go and move there just yet, unless you're already there, in which case, comment down below on how much it would cost for me to fly over and stay with you once I can travel outside the United States again. I'd love to come visit it. It actually looks like a very beautiful country with some nice deep blue lakes and some beautiful mountains. definitely looks like a place worth visiting. But let's move on and talk about sharding and Ethereum. So, sharding, at least Ethereum's current form, won't solve all of their scalability woes. We got to talk about Polkadot. We mentioned them a couple days ago for their partnerships that they worked up for DeFi fun, but they've developed a more flexible form of sharding than what Ethereum's developing. So Ethereum, once again, getting leapfrogged. It kind of... So, a standard linear blockchain such as Ethereum, in its current state, or Bitcoin, operates in a way that requires every node on the network to process every single transaction in a sequence. The security of blockchain derives from its decentralization. The more nodes on the network, the more decentralized, and the less likely one or more malicious nodes can attack and affect the network. But this decentralization is the inherent scalability issues. The more nodes needed to process transactions, the slower the network becomes. For this reason, Ethereum is currently only able to handle about 15 transactions per second. So, sharding as a concept, it's actually been deployed in centralized systems for some time now. The idea is, a company has grown to a point that its customer database is so big. That's a lot of companies anymore. Believe me, big data everywhere. But it's so big, it's slowing down the server on which it runs. So the company decides to carve up the database into smaller pieces by geography. Let's go by state, and store it on multiple servers to reduce the weight and the search times. So in the blockchain context, that makes this a bit more challenging, because you have to determine which nodes, confirm which transactions. Proof of stake makes it easier, but it's still not perfect. So you guys kind of see why it's taken Ethereum a long time to get the sharding implementation down. So Ethereum 2.0 is dependent on this move to proof of stake, which supposedly is happening sometime in the next 3 months to 2 years. So Ethereum uses what they call homogeneous sharding, which all the different shards of Ethereum, all the different mini networks, I guess, all have to report back to what's called the beacon chain, which communicates with these shards via proprietary interface. Polkadot is implementing a relay chain which has heterogeneous sharding. So in this case, the shards do not have to communicate with a central single interface like Ethereum does with Beacon Chain. So it uses a standard WebAssembly interface, which is widely used by developers. So a Polkadot shard or parachain can operate according to its own rules, providing it can submit its overall state to the relay chain using a standard interface. Bam! So if you use a student-teacher analogy, a teacher can accept students who speak many different languages as long as they can communicate freely, because they can write their assignments in their own language and format as long as they submit it on time. So Ethereum's getting leapfrogged again. I love Ethereum. My biggest bag is Ethereum. I'm super excited for its long-term potential, but it needs to get a move on. Its delays are starting to make me nervous. It's been too long. We need to see some movement to proof of stake at the very least. You're getting leapfrog, guys. Come on. Okay. Hop over. Don't want to get too stressed out. Let's talk about Digibyte real quick. It's the most purchased cryptocurrency after Bitcoin and XRP, according to Uphold, which is pretty interesting. It's got a lot of price activity. It seems to be winning altcoin investor hearts. We've definitely known it's risen in rank. It's been around since 2014. It's pretty freaking quick. It can create a Digibyte block every 15 seconds. It's 40 times better than Bitcoin in terms of speed. It's also close to having about 600 transactions per second, and if it meets its goal of 2,000, it would be ranked on the same level as Visa. So they're moving. In a day, Digibyte can carry out over 48 million transactions compared to top blockchains. Digibyte's actually about 10 times better. And according to Cassiopeia, in charge of DGB public relations, they've attracted a lot of followers because of its genuine intention to create a financial system centered on people and social value. So they're doing all these things like, hey, we're doing this, hey, we're doing that. But hey, Digibyte's rallied more than 900%. to about 3 cents US under 6 weeks. Like, according to that, yeah, it's been doing some things. It's been moving. It's definitely a coin to watch out for. There's a potential Coinbase listing in the works. This coin, by transaction speed alone, is worth watching. Long-term success, I don't know, but Ethereum and Bitcoin are a little slow, and if this can drive forth adoption and I can buy things with Digibyte coin and retailers will accept it because it's fast, I'll take it. So let's round things off real quick. The Community Futures Trading Commission, or CFTC, has unveiled a 2024 strategic plan. The U.S. regulator has set itself the goal of improving innovation and regulation for market participants, and it will address risks and opportunities arising from 21st century commodities. We will develop a holistic framework to promote responsible innovation in digital assets. Oh, yes. The U.S. regulator recognized that Bitcoin and Ethereum are part of this new commodity category. Therefore, in the next few years, both cryptos could enjoy full approval from U.S. institution and the legal framework, which could lead to a new era of adoption. Woo! That's what we want. More clarity. So we know where we stand, what we can, what we can't do. So that way we can work in the system to change the system. Or tear the system down and build a better one. Tomato, tomato, potato, potato. So they will emphasize the principles to which they expect the industry to adhere. Where appropriate, a principled approach can help our markets remain fair, innovative, and vibrant. Ooh. So as part of this strategic plan, the regulator will seek to strengthen the derivatives market. The CFTC will promote transparency and liquidity for assets under its jurisdiction, which could reduce the number of cryptocurrencies and digital assets that obtain the classification of commodities, such as privacy coins, Monero, Dash, Zcash. As reported by CNF, this issue is one of the more important ones in the crypto space. So kind of a 3 steps forward, 1.5 steps back type of scenario, but still good. This is good news. I'm so glad it's finally happening. All right, well, that caps things off for us today. Going through CoinMarketCap, we did have a bit of a pullback. Stocks dropped, and apparently that correlates the market. Pretty much everything in the top 10 is down by about 2%. We'll see where things go from here. Definitely, we were due for some retractions. Altcoin season is still very much upon us. The market is very red today. I'm trying to find something. The Midas Touch. Midas Touch Gold up 13%. Good for them. Decred is up 6, but I'm down in the 60s. Yeah, it's a pretty red day overall. Horizon's up 7.5. So hopefully things can stabilize and we'll see a bit of an uptick here soon. But that will do it all for me today. If you made it to the end of this, thank you. Please subscribe so that way you can check out more content that I put out. I do really appreciate everything. Comment, like, all that stuff. If you're listening on the podcast, throw me a shout out. Let me know what you think. I will talk to you guys all tomorrow. Thanks and have a fantastic day.